Good morning. It is Friday, April 5th, 2024. Did not plan to talk about SPY, but given the event yesterday, I figure it's good to go over. Um, Here is what you see in front of you is the 5 minute chart of yesterday. As you can see, everything was hunky dory until 1 o'clock. Okay, that's 1 o'clock right there. And then one of the Fed, Cash Carey, the youngest member of the Fed, I believe. He's the bald-headed Middle Eastern guy. He's on CNBC and many other networks very often. We have a very active, for the past few years, for those that follow the Fed as long as I have, if you go back the last 20 years, you know, you would have Greenspan, Bernanke, and the rest of the Fed appear on TV maybe once a week on various different channels, but that's about what you normally see. And then since Powell, seem like you have many members of the Fed appear on TV sometime weekly. So you have not just Powell. Sometimes Powell appear, uh, you know, maybe once every 2 weeks for whatever reason. But then you have 4 or 5 other members, sometimes appearing on the same day, talking about certain things. It's just they seem to be everywhere, chirping. All right. So for yesterday, Kashkari chirped about, you know, on the previous day, Powell came on and talked about, yeah, we still plan to have 3 rate cuts. And then Kashkari came on yesterday and said, well, if inflation is stubborn, we might not be able to cut at all. And that was this. Now, the market has been way high, way too long, right? There is no denying that it has been the most resilient bull market we had. Um, I think if you go back and look at the data, I have seen this data tossed around by many people that we have had the longest run, consecutive run of days and weeks without a 3% correction. The longest. Okay, that's how crazy it has been since Christmas. And so, whatever the excuses, the bots pick. I think once this happened by 2 o'clock, the bots was like, okay. And to be honest, I was caught by surprise. All right. Yeah. This at this point, by 2 o'clock, you're just like holy moly. By three, it's yeah, it's the stop was getting pulled every single places, and it was nasty. All right, so let me go back to 1 year chart. I talked about SPY, QQQ, the short even 2 days ago, right? 2 days ago, I said, well, I missed the opportunity to short. It was too hard. Well, look at what we did yesterday. Yesterday, we took out everyone since this day here, since March. So literally, you hear me talk about this enough time. We took the stairs up. We took the elevator down, right? What happened yesterday wiped out everybody that was long. Well, by wipe out, I mean you went from positive gain into negative 2 weeks. Okay, everybody from March 18 in 2 weeks. Okay, 2 weeks of gain wiped out. That's how fast it can happen in literally 3 hours. 2 weeks, 3 hours. So remember that the elevator down can be vicious, vicious. Just look. Let's go back to December, even November. You see, there you go. This is the biggest red candle we had, and that was not 3%. That was bought up, gone, right? But yesterday, the worst red day, the worst, biggest decline since my birthday, November 13th. Wow. Wow, right? Wow. All right. So now what? Is it time to short? This is why shorting is so difficult. For some people, they're very good at it. For me, for those that follow me long enough, I have a real hard. I start to dabble in shorting more with bear spread since December with limited success. It was successful in January and February, and then March hurt me overall as far as performance because of the short bear spread that did not work. And I thought about shorting, and well, guess what? Yeah, it's for those that did short on a pop when it popped early in the morning. Yeah, I thought about it because it went back to all-time high. The thought did cross my mind before lunchtime that maybe it's time to put on a SPY bear spread that I've been talking about for weeks. There was a bear spread that I put on at the end of February from March that didn't work at all. And I thought, well, maybe it's time to do it again because I talk about it, but no, I didn't do it. And boom, where can it go? Surely, can the 50 be it? Yeah. If I was to trade the SPY, that's it right there. Okay, that is it right there. To me, there's a zone of right here. This, you see this big gap up right here. Okay, so if there is a zone of buying the dip as far as the SPY right there, all right, between the 50 and that, and then worst case scenario, you have the gap fill, right? So if I was to trade the SPY, first buy is here, second buy is there, third buy, the bigger buy would be the gap fill, which would be 497. Okay, so that if you do the math, 524. Let's do the math real quick with my phone right here. Let me see what kind of percentage decline is that. When in doubt, rely to good old math. Okay, let's see where the gap fill is. The gap fill is 497.37. 497. 524. 9%. Yeah. Right? Yeah. If you are bullish long term, and most people should be, yeah, we've been talking 5%, but worst case scenario, it could be 9% and beyond. Okay. If it's 9% here, 10% would be not that far off, okay, between in that range of where this candle is. So yeah, that's where you want to put in long-term money. All right, it's what's the worst case scenario? The market goes sideways for the rest of the year. Yeah, not a bad spot to buy. I wouldn't say back up the truck, but if you are bullish long term, that's a 3 spot. Okay, and you can apply what I just said over to the QQQ. Okay, it's pretty much very similar, but I figure I cover one, and that would be good enough, right? Okay, now for those that uh, don't know, we have another bird flu. So watch out. Egg price could be going higher again. Yes, there is an outbreak of bird flu, I think in Texas, that came out a couple days ago. I have not talked about cow mein in a long time. There was a member on the private chat group that asked about cow mein sometime last year. That's why I drew in, I think, whoever it was that asked me that question, Kenzie, I believe, call out his name, one of my member from Canada. Um, I hope you took action, because if I draw on this zone down here, maybe you asked me, I can't remember when, but if you asked me when it was down here, I hope you did, because if you did, 50% return. Yeah. Now it's up here. Um, I wouldn't chase it. I would say time to get out, but let's pan out 3 years to see. Once again, is it a surprise that we are at a ref high? Look, you can easily see. Okay, now that it's here, let's draw in another zone, a profit taking zone. Okay, look like it's try. It peaked over and it came back down to earth. Okay, but if it can break over that, then you're in ray air to 65 into the all-time high. But for now, it has met its match. So you see that wick and say hello, goodbye, and yeah, it did well yesterday compared to many other stock. Okay, for this to do this yesterday, it did well. Um, so I say, if you have it for short term, be careful. Um, I wouldn't buy. I wouldn't add to it unless it clear the zone and then dance around, right? Where you buy the dip, maybe at the 20 MA, right? The 20 MA has been pretty decent, even on this nasty wick down. It gap over, right? So yeah, I wouldn't buy the dip, but 20, 50 for now. Trim if you have it, but keep your eyes on calm. It can be rocky with the bird flu. I'm not sure how the bird flu will impact it, but you see where it was prior to the December, right? Yeah, and we all know what bird flu did to eggs, right? And calm, not good. Okay, so depending on how widespread the bird flu is, it could be a pretty bad next few months for calm. Here's a stock I don't trade at all, but I discussed it with also other members on the forum chat group. Estee Lauder. I figure I bring it up because of Ulta and Lulu problem the last couple of days. Okay, it's definitely one of those brand that as a man I'd never use. Women, makeup, all that stuff. Okay, Lulu is not makeup. Lulu is yoga pants. Okay, but it's the kind of thing where most male we not do most male do not consume anything from Ulta, Estee Lauder, or Lulu. But it is an area where I think as an investor you want to pay very close attention, because if there's anything that would signify um, weaker consumer is in this area because women, okay, won't give up makeup or fashion, right? It's as a man, we behave, we shop very differently. We approach shopping very different. Okay, it's not a sexist statement. I'm sure every male, and it's mostly male in this group that watch this, you understand how we are. We don't like to shop. Okay, talk to most men. Most men detest shopping, I included. Right, so we just it's not in our DNA to like wandering around shop. As a young person, I go to the malls to look at the ladies, to be with my girlfriend. I didn't go to the mall because I enjoy window shopping. But yesterday, well, last week, Ota talked about they see weaker trend of consumers. So watch out, okay? If you're into uh, Estee Lauder, I mean, nice gap up. Okay, well, first of all, it gap down. Fill the gap nicely, consolidate, up move, and then of course, whatever for whatever reason, I don't care. It slide down into the consolidated zone. See, look, it makes sense, right? Look at where it came down and consolidated right at the same similar spot that it was. Okay, so and then it gap up 200 MA, gap and slide, not a good thing. Consolidate, trying to break out, fake out, support at 100. So if you look at the trend since November, the 100 acted as a resistant, okay, and then it acted as a support. So depending on how Estee Lauder behave, perhaps buying the dip at the 100 MA might be the first spot to buy anything. Okay, no doubt. If you're watching it, I would say this zone right here. Okay, let me draw it in. Let me draw it in. It's just a clean chart because I have never traded the stock. But look at that, see? That zone. So if you're itching to buy EL 122 to 126-ish, right? Yeah. The first spot though would be up there. But you have a couple of spots. Okay, so you have the 100 MA, you get the gap fill, and then you get the zone. So personally, I wouldn't touch it until the gap fill. And then a bigger order down there. But that's me. Okay? Given the environment we have, EL might have bad earnings if OTA warned already. Okay, so be careful. Definitely do not chase here. Okay, do not chase it here. K could be a breakout. Look, it is once again. It's okay. Once again, you see TA coming in. See, that's sure the gap was pretty ugly, but if you look at as always, there's a zone. Okay, there's a zone. Let me draw in the zone. Once again, it's been a long time since I trade K. I exited K completely. All right, so what you got was a nasty gap down, multi-year low here. This is not just 52 weeks. This is like multi-year. I think. Let's go back 3 years. Yeah. Let's go to pandemic low. I think that might be pandemic low. Go back 5 years. Wow, that's even lower than pandemic low. Okay, so that was a nasty candle, absolutely nasty candle down here. All right, so but then you get the nice rise, and then phew, okay, at this point here, you got a lot of people remorse holder on this day. On this day, they sold. Okay, and then you got the year-end tax selling that took place, and then resume, and then you got remorse seller coming in, and the 200 MA is here. Does that mean that it's good to go? That's nice. Is for yesterday. This is good. Okay, out of many sectors, defensive sector was holding up well. The meltdown did not knock on healthcare insurer, Humana, ELV, UNH, and then of course the super defender staples. Okay, held up fairly well. Not all; they all went down. Some of them went down as well. But for me, I won't be chasing it here. The more it consolidate, the better. Eventually, it will get into the zone and dance. Okay, it's on the watch list. It's on my watch list. Definitely not something I would chase. Not right now. Last, HRL, Hormel, the king of spam. Yes, I love my spam. Nice gap up into a channel, a downtrend. Okay, I like spam. Let's change that so that we see. Right, so it gapped right up into that. Okay, and slide. And now, surprisingly, how strong it has been. It's back, right? Even with yesterday, yeah, staple. You know, in tough time, guess what? A can of spam is still a lot cheaper than going out to McDonald's. It could be a good breakout, right? It's on my potential buy list. What I want to see is continue sideways dance, and then this downtrend will act as support, and then there could be a run from 34-ish, 35 to 38. Hey, it's 10%. Are we gonna sneeze at 10%? If we're fearful on a 10% decline on the SPY, why would we ignore a potential 10% run on HRL, right? Yeah. So yeah, I do. Out of everything that I've shown today, I think HRL is the best potential long out of all the top stock that I mentioned today, including SPY. Anyhow, that's long enough rambling for today. Good luck, everyone. It's gonna be a busy Friday for us here. Let's see if we get a bounce on the econ data. Okay.